Good morning. You there? I think so. Let's go. Just loading my coffee. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's always a good idea to be small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Sorry guys, I'm all over the place today. Don't know why. I got up early and I'm late for everything, so I don't know what's going on today. One of those things. So, good morning. Nice to see you. Oh, wait. Is the chat coming up in the streaming software now? Jean-Guy says good morning. I see it here, but not there. No? All right. There's some weird YouTube thing still going on. All right. Well, anyways, let me pop the chat, move it up here. What do you want to cover today? Let me know what currency pairs. While you do that, I will remind you also that Traders Way makes this possible. So please visit tradersway.com and pay it back. Pay it back. Tell them that you value this. Also, these webinars, if they're valuable to you, please let YouTube know. You simply do that by clicking the thumbs up. You do that by leaving comments. And you do that by subscribing. It's pretty simple. You got to tell YouTube, hey man, this is the stuff. This is the stuff I need. This is the stuff people need. So anyways, let them know. It's up to you. If you value this community, you need to do it for the community. Trent says, hey, so do I have super fast internet? Sorta, but here's the thing. I believe we're going to have stable internet, and that's the most important part. So I'm cool with that. I'll show you. So I was pulling 40 or 50 megabits per second. Now I'm pulling on this laptop 300. On this laptop here, 500, and on my trading computer behind me, 600 megabits per second. So let's see what I can do while I'm streaming. It's not bad while I'm streaming in 1080p. Yeah. Boom. So I went from 50 to 300. So I had to order an upgrade, you know, my hardware so it can take, yeah. But anyways, that's 300 is better than 50. And behind me, like I said, these two newer machines are pulling more like 500 over the Wi-Fi. So anyways, put the money in. Things should improve. Most importantly, it seems like everything is stable. So no more dropped YouTube sessions and stuff like that. Cool, right? Cool, right on. So I'm happy about that. Got that done. Got that out of the way. Great. Done. Okay. All right. Let's, let me shut this little thingamabobber. I got to click that. It's really a bummer that chat doesn't come up there. All right. All right, so what did you say? Aussie yen, euro ZAR, euro dollar, yen, all that kind of stuff. This is interesting. YouTube is complaining that I'm not pushing enough to them. That should be impossible. Doesn't seem right. I wonder how I can force YouTube. Stream status good, but there's warnings. Stream. Anyways, I'm getting some warnings from YouTube that I'm not pushing enough data. So I don't know what that's all about, because that should be impossible. I don't think you can get faster than gigabit speed. So anyways, we'll deal with that later. All right, so today's big news is going to be, I think it's at noon, but Trump is giving a speech at the Economic Club of New York. Okay. And he's probably going to talk about the trade deal with China. That's going to be a big mover. Okay. So that's the moment of truth today. Do I push those signals to you? Isaac says, no, Isaac, I teach you how to do it yourself. Okay. So anyways, keep all of that in mind, guys, that's going to be the big moment. So we'll probably face very low volume and volatility until that happens. Okay? Oh, by the way, let's get some proper sound in here. Okay? So that's going to be the big thing today. Just keep all of that in mind. So we had a lot of questions about Euro. Here I have Euro CAD. I don't think you want Euro CAD though. Euro, I guess we'll start with Euro dollar. Makes sense to me. Andrew says, Wayne, I've been watching some of your old videos and use binary options, and you said they can be lower risk. Not true. They're defined risk. They're not lower risk. They're defined. You only have this much. See, one of the things that amateur traders do is they put a small trade on and then they acquire big losses. Why? Because they don't get it out of their pathetic trade. They don't use a stop loss. They can't take the, whatever, all these things, and it gets worse and worse and worse. You can only lose so much on a binary option or on any option, right? You can only use what the money you put up, right? So it's a defined risk. That's all. Do I trade them? No. Trader's Way doesn't offer them anymore, but what I was teaching people was how to use options as a way to hedge your cash position. Trent says, terrible risk reward. Well, almost 1-to-1, which is probably better than most scalpers. The big issue I have with binary options is that you can't let the winners run. And that's the secret to success. But as I was teaching, you can use options, in this case binary options, to hedge your cash position, which the defined upside and downside is actually appropriate. So, but whatever. All right, so let us be going. Let's change this out. Let's go fresh on our template here. Let's clean it up. Let's go a little higher time frame. So this is what's going on. Bears have already had their chance to sell. Bulls are now getting their opportunity to buy. Morris, when did I make them? I don't know. I believe it's on the Trader's Way YouTube channel. Type in, I don't know, Wayne McDonald, Trader's Way, binary options. Okay. Not options, binary options. All right. I've got to get my drawing tool out. Can't find it, so I guess it's not running. There we go. Yeah, it was Titling that way isn't my style, but I wanted to see if suddenly I would get 2 million views or something like that. It seems like most people clickbait everything, huh? Oh, is it 1 p.m. Eastern time that the Trump speech comes out? Cool. I've been to meetings there, and the other one, the Athletic Club of New York, I think it was called, and I think there's one other club right there on Central Park. Beautiful, just beautiful facilities at some of these things. All right. So, anyways, let's do this. I got my drawing tool going here. So, if you're a bull, you're looking for this, right? So, you're just maybe getting your opportunity now. And of course, we already talked about this, but if you're a bear, this is what you're doing. And so, bear's already in. Let's click a couple of times in and get a closer look at this. Bulls right now are waiting for a double bottom. Okay. So you have to decide, are you a buyer at the double bottom or are you a buyer at the roll reversal? Okay. It ends up being the same thing, really, or a little slightly different, but significantly less risk. Okay. So that would be your trade plan. The most conservative bull would look for something like that. Right now, you can see you're on your price. So you got your price. You just don't know if this is the right time. So you need to drop into a smaller time frame and see if it's setting up. Okay. So we're looking for a double bottom here. We're looking for this to hold. So the way this would work is to repeat this pattern, but on a smaller time frame. You would get this move, which would then lead you down to the double bottom, which then would lead you to the higher high, higher low. Any questions about that? Bears can't do anything now anyways. The best they could really do is like sell off the moving averages, of course, and these are follow-up trades. But to do that on the monthly and weekly M2 is just not appropriate. Okay? So, you could kind of do this move, sell here, but I wouldn't do this move and sell there. Because of the weekly and the monthly support. It just not appropriate. Okay? Well, to Smith, I just said I would do it here, but I wouldn't do it there. Okay? This is a proper trade. There's a reload. That's just moving average theory, right? But the fact that we're here now, let me change to a marker. This is a weekly pivot point. This is a monthly. No, sorry, I had that backwards. This is a monthly. This is a weekly in here. And that means that's support. So I don't care what strategy you use. Selling at support is not ideal. So yeah, you would reload here, but you have to sit and wait here. Okay. So of course, the obvious part of this, if you're already a bear, you have had to have caught this trade up here. Okay. I've trained you properly that you need to be there to catch that. That's what it's all about. Okay. That's what it's all about. Okay. And notice that that's the weekly M3. Here's the target for the week. Now it's out of position because it's so unbelievably bearish. But of course, it's bearish off of the monthly bearish pivot, right? So, yeah. So selling here now, or you sold here and you're adding to it, it's not appropriate. As I said, it's not appropriate. Okay. That's clearly support. So no, too late. Not. You should be aggressive on monthly clusters, right? Than aggressive because you missed it, right? Got to know when to walk away. All right, so there was another euro one. What was it? Euro Nautilus. Euro Czar. All right. Where's it? Exotics. And Euro Czar. I guess this is it. And a big nothing's happened. Yay! What is important in this? The important part is this is where bears would sell on a weekly basis. This is a weekly sell. Okay? And the target is off the grid here. I have to click out. And notice the cluster. But we talked about this yesterday, I'm pretty sure. That bears have this plan going. Now, a bull is not going to be very happy with this whole situation, but if they were looking to buy, it wouldn't really be a good buy, but they kind of have a little bit of hope here. I don't believe it for a second, so it would be very bad. First of all, it's not awesome support. It's not, they have weekly but not monthly. So it's just a bit of gobbledygook. And as you can see on the longer time frame, we have this going down anyway. So I'm much more likely to believe this is, this. Okay. Now, if we get down to the weekly target, it's also a monthly target. And that's going to be hardcore faux show support. Okay. Well, Lulo says, would they affect each other? Dude, there's a euro on both sides. So, yeah, of course. Okay. Do I not look at channels? Well, define your channel. So I have a regression channel here, right? So maybe this answers your question. do I look at channels? What I'm telling you is this is very, very much sideways, which is actually okay for a swing trade, or sorry, for a carry trade, because you want carry trades to go really slow anyways. Because when markets go fast, people tend to take profit and you get big snapbacks, and the pips scare you out of really good trades. Really slow trades that make hardly any pips day after day after day give you the strength to stay in the trade and just collect the yield. Okay? So by and large, you can see on the highest time frame, we are in a channel this way. Okay? On a smaller time frame, you might say we're in a channel this way. Okay? That's cool. On yet again smaller time frames, I have this going up, I have this going down, I have this going up, I have this going down. Right? This knocked me out of a bunch of little trades, and I believe we're still going to do this and this and this forever until it breaks. Okay? That's why I was saying, like, if you had a bull, you had weekly potential to buy, but it's not a good one because you don't have monthly. Okay? You have a daily going up. All right. That means I can be right for a week and then you'll be right next week, right? So you have it going this way. That's fine. I'm just looking at it from a different point of view. Was there a reload on Sunday? Okay. Do you see one? you have this, right? And then you have this. So you could have taken the shot here, suffered the pullback, and then, or you could have sold here, okay? Now, either way, your stop is in the same place, as you know. Your stop is up in here somewhere. Actually, no. Whoa. Sorry. Your stop is here. Okay? So there's your plan A. Here's your plan B. Plan B has the cluster. Plan A is what you wanted, but anyways, both are plans. Either way, your stop goes above the R, and you're done. What time is it for me? It's 8:30. So once again, guys, I hope you take 1 second and like the video that you're watching now, and if you're new, please subscribe so you get notifications when I start the stream. And lastly, and I think most importantly, I ask you to leave comments on the recorded videos. All right, so later today, or maybe just before tomorrow's live stream, go into today's video and leave a comment. It's important for the community, okay? What are the blue lines called again? Regression. Okay, right here. Okay. Okay. All it is a mean, right? An average, and then the deviations from the average. Okay? And the general thought here is the farther price gets from the average, the more likely it's going to snap back to the average. So if you remember that chapter in my book where I talk about pulling and like drawing on a bow, the farther you draw, the more it wants to snap back. It's the same idea. Onyx, I don't know if binary options are still available. I'm sure they are to someone, but they don't make any sense. Especially the way that they're sold or the way they're taught, you know, get rich quick kind of stuff. They're basically scalping, right, with a predefined risk and a predefined reward, and your reward is less than your risk. So think about just the logic of that. I think most people know when they first start trading that you should buy low and you should sell high. And I think people also know your losses should be small and your winners should be big. Well, by definition, your winners are never big. Your winners are always smaller than your losses. So the only way you can make money is to be right almost always, or risk too much money. Okay. Chuck, I use, I believe it's linear regression. Okay. Regression means come back to the line and line, you know, so it's not the standard deviation, it's the standard deviation from the mean, from the line. Okay. Back to the middle line is the linear regression. Emil says, will the German recession pull the euro down? Well, what creates the strength or weakness in a euro in the euro, let's say? There's only two things. The central bank manipulates supply, strengthening or weakening the currency. But they've already done as much as they possibly can do, basically, right? So the euro's already weak. So the only possibility that for the euro to get strong has to do with Americans wanting to reinvest all the profits they've made in their own stock market But they don't want to buy back into their own stock market because they're already exposed to that. They already pulled money out of it. It's already at all-time highs. They're worried about the market being too mature. So they're like, what do I do with all this money? I can't buy more Apple stock. So they're like, why don't we buy some super dirt cheap German company? Right? Like, for example, you can buy Deutsche Bank for like, I don't know, €8 or something. And you're like, this bank sucks. Everybody knows this bank sucks. But, you know, for a multiple of what, 1 times our earnings, you're like, I'll bet that Deutsche Bank stays alive. And in 25 years, I'll get a return. And you just buy it because it's cheap and you got free money anyways. Okay? But that creates demand for the euro. Okay? Chuck says, yeah, the lines are similar. Yeah, well, they're just different versions of the same thing. It's like oscillators. They all are overbought and oversold, right? They're all just slightly different math. None of it actually matters. Just pick one and learn it. It doesn't matter which one, right? Okay. Anyway, so let's move on. There's your Rand. There's what I'm doing. That's a sell here. And yeah, hopefully by the end of the week, we're down there. And when we're down here, you must take profit. Okay. Cool. Anything else going on? Not really, right? So Lira is kind of doing the same thing. So drop into a smaller time frame. When this goes down, I'm happy I make money. So down is good for me. And down it's going. Yay! Cool. MoveOn.com. Let's see. Let's do yens, I guess. Let's do this one. Carefully, some. Don't use that language. When you say things like the stock market's going to crash, that tells me you don't know, right? Just right away, the language. What do you mean crash? Right? That's like the sky is going to fall. What if there's a zombie apocalypse, Wayne? What will happen to gold? Right? Like, don't even use that language, okay? I'm training you to be bigger than that. So let's talk about, well, how about you can do your research because I don't want to get off track. But I've asked probably 2 or 3 times lately for people to do research on market cycles. Do some research on that. Also think about what would change the situation that we're in. Right now, the stock market is going up and up and up and up and up. Okay? So it's better to think of like, why would the stock market come down? What would get people out of the thing that's making them filthy, stinking rich? So what would that catalyst be? And then look into seasonality. When do stocks tend to go up and when do stocks typically go down? Okay. And then lastly, how will you know the bubble has burst? Okay. But don't say things like the stock market crash. It's just amateur. And I think more of you than that, right? You need to do your analysis. You need to do your research and say, well, these are the things I'm looking for. These are my concerns. I've looked at the cycle. We're pretty mature on that. You know, then when I look at seasonality, I can see, you know, a change coming. And then I was thinking about the political cycle as well. You know, so if I see this, I'm going to think that. If I see this other thing, I'm going to think yet a different thing, right? And just look and think and answer questions like that way, okay? Okay. Trent says something about a bold prediction. I don't care about bold predictions. I only care about analysis. Honestly, I don't, right? Leave that for the talking heads on TV. Okay? Okay? So just tell me about your research so we can discuss it intellectually, right? That's all. Okay, so anyways, yen, we talked about this yesterday. There's the bearish version of that. It doesn't make the market fully bearish on the longer run, but I don't like that none, is another way of saying it. So what I really want to see as a bull here is I need to see this find some correction to the upside. And I don't want it to come down to the purple line. I want it to stay above this M2 level, which this is just rehashing yesterday's analysis. But notice I said that this price was important and we did not break below it. So there's still a lot of hope in this, right? So I would hope it behaves this way. Okay? Now this is still 100% retracement. I don't like that as well. Lulo says, I wonder if those guys on TV... Yeah, look, they all trade. Here's the thing. Why do you go on TV? Well, you want to sell yourself and your firm and your strategies and your fund and get exposure. And of course, being on TV, you can show your existing clients or you can show your potential clients how smart you must be because you're on CNBC, so you must be smart. I mean, dude, it works. It's absolutely necessary, right? So now how do you get airtime? Clickbait. Just like these idiots on YouTube. It's all about clickbait. So how do you get on CNBC? We are going to crash in 2020. It's all over. It's going to crash. And people are going to lose money. It's just going to be like in 2008. It's going to be like 1930. We're all going into depression. They're like, ooh, well, okay, let's put this idiot on TV and, we'll bang out 4 minutes of airtime. Right? It's very rare where the guy comes out and he's like, you know what? Everything is overhyped. This is traditionally what happens. This is normally what happens this time of year. Yeah, Trump tweets are important, but it's not what's really, truly moving the market. And they're like, this guy's boring. Okay? So anyways. So that's just the nature of the beast, so to speak. All right, speaking about the beast, let's look at the beast. Okay? Our lines are holding. Plan A and Plan B last week are holding. Plan A this week. Okay? This is a clear buy pivot. This is a clear retracement buy pivot. And this is the sell. Which story seems more believable? Well, we got some big resistance. That's faux show. So you can't sort of diminish all of this. But on a weekly basis, that's not what's supposed to be important. Okay, what's supposed to be important is this price and this price for bulls working their way up in a ladder. So up, down, buy. Now we're hoping for a break. Okay, and a breakout. Not sure if that's going to happen, but that's what's there. If it falls bearish, then this just confirms more of a range than a trend. Okay, because this is supposed to be an up, and this was supposed to be the down. This R1 is irrelevant, so it's more like if that ends up being a top we can't break, then we just don't have the market. Nobody's got it. Okay, no one's got the upper hand here, and that's that. Now, some of this is, there was so much great news just the other day, and now that great news is diminishing, but it's the same thing with the dollar play, right? Like, oh, the United States is going to do a deal with China, and then 24 hours, well, maybe they won't do it. Whatever. This is why you have to be smarter than the news. You have to be smarter than the tabloids, Right, so like I'll remind you, I prepared you for all these moves in August. So like all these little blips, like Trump sends a tweet and someone at Brexit said this, this is all just nonsense that happens on these small time frames. But if you just started buying back in August, you'd just be fine. You'd just be fine right now. You're making pips every day. You're collecting yield every day. And yeah, there's some up and down, but you're more of a portfolio manager than a news scalper. And it just kind of, overall, the trend takes over. Overall, the seasonality takes over. So in the past, I've used examples of like, you're a farmer. You have all the right tools. You know you shouldn't plant your seeds in the winter. You should plant them in the spring. But you'll do better than, like, if you just go out in the spring and throw your seeds on the ground, that'll work, but you won't get the best yield. So you should probably till your soil and plant them, right? And then let them germinate and all that kind of stuff. And then you'll probably do better when they start growing to protect them from drought if you can irrigate, or protect them from grasshoppers or disease if you could spray, right? But you don't know if it's going to rain. You don't know if it's going to rain too much. You don't know if it's going to be too dry or not dry enough, or you don't know if there's going to be a tornado, right? You know, with hail that comes in and destroys your whole crop. You don't know. You have some insurance, but you don't know if any of that's going to happen. But you do know how to treat your plot of land, and you know to till the soil and rotate your fields, and you know, and how to apply the right chemicals, and when and why and what not, you know, and how much, and you know when to start looking to harvest and all this kind of stuff, right? And you have all the right tools, but you still don't have control. So we're very similar. Like when you know fundamentals and you know technicals and you know some seasonality and stuff, like you know when to do things and why, and then there's all this stuff in between. But that happens every year. Sometimes it rains too much, and the next year you're praying for rain, right? And it's part of the cycle. And you remember that year it was so dry? Oh, we were praying for rain, and then it rained for 2 weeks, and then we were praying for sunshine to come out, right? And you're like, that was pretty fun. And this is all we are, just farmers. We just do the same thing every year, and we put a lot of hard work into what we do, but we know what to do. We don't quite know what to expect, but we know how to handle it, right? So this is compared to someone that just shows up and you're like, oh, did you see that Trump tweet? Blah! Or look, Brexit, yay! Oh, look, Brexit, no! Right? And you're just a bloody mess. Right? Just bloody mess. So I want you to think a lot more strategically and a bit longer term than probably you're used to. Okay, now looking at this, where we are now in this pair, this is a big psychological level, and it's probably what's going on. And we're waiting for things like, yeah, truly, some Brexit news would be important to this pair, and some trade news, which we'll probably get today at noon. Okay, if Trump pulls the deal today, right, he starts talking like, yeah, there ain't no done deal with China. I ain't ready yet. Okay, then this comes down. If Trump says, yeah, this is it. This is what's good about America, you know, where I'm putting America first. Boom! Okay, he needs a deal to keep soybean farmers in Iowa happy, because he's worried that they're going to go communist, vote for Warren. So, right? So whatever. So if he does a deal, boom, this goes up. If he says, I'm not so sure, I'm not ready to sign a deal, this comes down. Enough said. Enough said. Nuffsed. Look it up. Okay, cool. This is by and large everything here, right? Pure mathematics says pound yen ranging. Yeah, then be cautious, be careful, right? Okay. Coolio. Now this goes back to an interesting thing because it didn't quite set up. CAD is not as exposed to China as many of the other currencies are. Canada's by far largest trading partner is the United States of America. Right? So this is definitely upward. If you were a bull and you were planning on continuing this trade, there's your plan A and there's your plan B. Well, we're a long ways from plan A and plan B, right? But if you're in the swing trading group, we definitely were prepared for this downward move. Absolutely, totally. And then that week also opened up like in this beautiful cluster of M2s. Gorgeous. But it's still not quite perfect, right? In some months, I'm telling you, it's perfect. Look at this. Nice entry. Look at this exit. Like, sick. So there's still lots of room for this to go up. And there's a couple of ways that it can happen. So let me change colors here. Okay. The best case scenario here is we have an up, we have a down, and we have an up. It rarely works best case scenario, but that's really what if you're hoping for something, that's what you're hoping for. The other thing which we were prepared for in the swing trading group this week is this double top in this price range sets up a bold move to the downside. So bears make some good money selling at 83, taking it down to 82. And if that had happened, we expected Monday or Tuesday, so it's still Tuesday, it could still happen. In that scenario, we would expect a counter trend trade to develop on a weekly basis, which simply sets up the bullish move on a monthly basis. Double bottom on this central pivot. Perfect. Love it. Okay? And right now, neither has really happened, but both are still plausible. So right now we're in here, so let me circle that. Let's go to, let's do beautiful yellow. Right here is where we are, and plan A is still holding. That gets us M2, M4 here, but gets us CPP, higher, low, 1, 2, 3. CPP, 1, 2, 3. Easy as ABC. Okay? And there's a next wave if bears did come take this down and then fought here next week. There is another opportunity for them to take this down to 81. And then that's where, bulls really start getting in. But I don't think that's likely under these market conditions right now. So really this just went from 83 to 82 and then should work its way back up. Maximum, we're caught on 82.50 and that's actively defended support. And right now, probably good enough, but you don't know. So in that case, you drop into a smaller time frame and you have to decide, are you a buyer at this level? So let's mark this. Okay, are you a buyer there? Let's go to a higher time frame. And if so, where do you put your stop? Put your stop right here. Easy peasy lemon squeezy. Okay. Then adjust for your spread. Okay, that's it. So you're risking, I don't know, 35 pips maybe. Okay, and the upside potential on your 35 pip trade is you're taking it, let's just call it 82.50 to 83.25. So it's not big money, man. You're risking 35 to make 75, something like that. Or you're in it for the rest of the month, which means this comes down and then goes back up. So now I got to go to a higher time frame, right? So now your bigger plan, you might be buying the step up off the monthly trade. In that case, you'd head up there, then you'd come down here, and then your next target would be way up here at 84.5. Well, it's almost 85 actually. So you're buying it at 82.5 going to 85. So somewhere between 200 and 250 pips potential, and you're risking 35. Okay? And just like everything else, just like the other pair, if Trump says, yeah, green light on the deal, boom, this goes up. And we'll be up here 83.50 today. Yeah, it'll go up 100 pips today. If he says no deal, this comes down and we'll get hung up here, most likely. Okay, most likely. If it goes even farther down, but that's not expected, but plausible. Like I already said, 81 is also a buy zone. Okay, but no one wants to see that. Well, DeSmit Robin, there's some rumor discussion, maybe rumor's not the right word. There's some discussion where that thinks that Trump was pretty upset with the Chinese for leaking the deal because now he wanted to announce it, right? So now he might come out just for spite and say, not now. not now. But I don't know how many soybean farmers are sitting on right now. I'm sure harvest is done. Right? Gone viral in Africa. Yeah, fxbootcamp.com. I didn't see the conversation, but yeah. Uh, you should leave some homework to spice things up. Not sure what you're saying. Illuminate that a little more. And then what are your thoughts on Renko charts? Well, I'm not a Renko chart guy, but is that the one where basically it takes time out of it and it just looks at higher highs and higher lows? In that case, it's just a different form of trend trading. Thank you, crypto. Yeah, we have 325 people watching right now and only 85 likes. That's not a very good percentage. So if you would please be kind enough to take, the 1 or 2 seconds and click the thumbs up button. Make sure you subscribe if you're new, because when I start these live streams, you get notified. It brings you right into the event if you're available. And then lastly, if you could please comment on recordings. It's super important. Super important. You leave a comment, even if it's just hello or thank you. It's super important you leave a comment on the videos, on the recordings. So for example, before you come into tomorrow's live stream, maybe go to today's video and just say, hey man, this is what I learned. I really liked it. Thank you. Right? And then come into the live stream. But if you could do that, I appreciate it. Okay. Thank you very much. Okay. What's the next currency pair that you would like me to cover? I'm happy to do that. By the way, like 10 people just logged out. I guess they didn't like it that I asked for that, but anyways. Gold, yeah, we did gold yesterday, but we can go through it again. But hang on. Sure, gold. What else? Gold, gold, gold. Okay, let's go through gold. Euro CAD. Well, it's going to be much the same. I've covered 2 euro already, two different euro pairs, so it's just the same, right? It shouldn't be any different. Oil, we can cover that. Pound yen, Sharif, we've already done. Pound Aussie, Trent. Maybe. I'm not a huge cross guy because I'm a fundamental trend trader. Crosses often don't make sense. Sometimes they do, but that's just typically a shorter term relative strength issue. Sometimes it's fundamental, but not always. But so maybe. Let's see. Okay. All right. So gold. Let's start there. Let's start with gold and oil. Okay. All right. So this is just a follow up to yesterday. Nothing has really happened, but as you know, this is the bearish sell, and the target for that sell was here. That's the conservative target, which is appropriate for that high, by the way. An aggressive low target is farther down. Let me redo this, delete. Okay, this, if you're using aggressive targets, this predicts that if you're being aggressive, well, it doesn't, sorry, I said this differently. This predicts this. You have the option to, keep your tab open kind of thing and go down here, but it's not predicted. It's allowed, but it's not predicted by this. So the easy money, low-hanging fruit stuff is this to this, okay? Every week, every month, you see something like that. It's clockwork. Heading down there happens, but typically to get that trade, the top of the month wouldn't be this, it would be this. And we would trade it like that. And that's not what we have. So really what I said yesterday is this is pretty much just done. Okay? Is it early enough to be in the month for a counter trend trade? Yes, almost. You could, if you're a bull, start looking for this. I just don't like counter trend trading unless it's super extreme or whatever. Generally, I don't like doing it at all. But if you happen to be a bull anyways, you could say, well, around the 10th of the month, it was more like the 11th, but you know, in the first third of the month, the bears hit their target. So bears are supposed to take profit. So a bull can start planning something like this. For sure. Okay? For sure. Yeah. Not that it will happen, but if you're already a bull, that you're looking for that. You're hungry, you're desperate, you're setting it up, okay? Maybe you're praying, right? But it's not good. So the sort of the easy money, like I was saying before, the easy money was this predicts this. If you're a bear, you would have probably been very nervous around this point anyways, so I don't know if you even stuck it out that far. And now we're sort of in this range. And then this will probably, in the future, be important again, which means that counter trend trade could come into play where you get this, 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 and then you'll be challenged here. Okay? Does that make sense? Mad Monkey has a question. Notice a lot of these flows have to do with dollar. Okay. So we did gold. How many people want oil? Baby G. Scenic Rim carpet cleaning. Lulo. Yeah, looks like a lot. Anything? Okay. Yes, sir, Dwayne. All right, cool. La 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 la. All right, oil WTI. And here we go. So looks like the support held. So let's review again. This is just from yesterday. We have this channel going up. We identified the mean, right? And our plans were off of here, back to the mean, and then up is just the general idea of using the channel. Then to add to that, right, we want to look at pivot points, okay? So this is the pivot point we want to be a buyer at. And then lastly, we were looking at price action, and this goes back into here. Okay, so last week we had the upward move. So I got to go to yet another color, right? We had the upward move. This moved up, okay, came back last week to the support pivot, then popped on the open, retraced back to the M2, and now is working its way up. And of course, right? Of course, you understand clearly that I'm bullish. No, but baby G, S1, R1 is not anything. You're saying ranging between the two. Well, that's better, right? But don't get caught up in a range when we're trending. So the range that you were looking at earlier is much, much smaller time frames. Remember, I start with the fundamentals first, okay? Then I look at long-term technicals, right? This is not rangy per se. it's just not aggressively moving, right? But remember how quiet and boring it was down around 51? It moved sideways for a long time, and I said, look, you need to decide, is this going to 60 or is this going to 40, right? Remember that big question? It was the 60-40 question. Everyone threw out their answer, and I said, well, I believe it's going to go to 60. Not that it's going to 60. It's more likely to go in the direction of going to 60. It can go to 80 for that matter, but at that 50 level, you must decide where you are in the market. What participant are you? Are you a buyer or are you a seller? And I said, this is a key psychological level. So from that moment, I've been a bull. Cool. Now it's been slowly working its way up. Slowly. So you'd say, well, look, Wayne, that's a range. And then, oh, now we're up here, right? And then you're like, well, Wayne, that's a range. Oh, and now we're up here. And you're like, Wayne, that's a range. Oh, now we're probably going to be up here. At least that's the way I think until that stops. But it won't happen until you get out of the channel. And then you can say, aha, I'm selling the next rally, or you're just taking a walk. Okay, so now we can update our regression by adding some new data. And there you go. So, yeah, so someone might analyze this and say it's an S1R1 move. I just think this is bigger than a weekly move, okay? Right? Hey, our leads. Cool. Okay, how can I help? Next one. What would you like me to cover, guys? I'm happy to do it. USD CAD, lots of people saying that. All right, well, what have we covered so far? Oil going up, dollar going up. So my first thought is, okay. Okay, let's see. All right, so let's start on the 4. And I want to add last month's central, or monthly. So, Nope. No. All right. So last month went from M3 to M1. Textbook. Perfect. Okay? Perfect bearish move. Now, if you're a bull, you love this huge move, retracement back into last week's buy zone into this month's buy, and you believe it's doing this and will continue to go up to probably 135. If you are a bear, in particular if you sold here last month, you're going to want to do it again. And this is the exact price that you want, and you're looking for some sort of reversal pattern like a ginormous bearish engulfing candle. So let's take a look at that on a 15-minute chart. And so you have to decide, guys. You cannot wait for this to happen, or should not. If you were a bear and you were waiting this whole time, you were hot to go HOTTOGO. Okay? That's what I'm telling you. Okay? That's the selling price of the month. If that ends up being the high, right, which means you'll get some sort of price action like this and it works its way down, then the target for those bears, because someone's clearly selling there and it's an obvious place to sell, then the target is way down here, 129.5. So you're selling at 32.5, going for 29.5. Okay? 300. There are bulls here, though, so they will defend this 132 level. So I think what you're going to see today is down and up. What we don't know is if it comes down hard like this, which is very plausible off of that, or you get sort of this move. Okay? I don't really know. Okay? But last week's entry is beautiful. But this is this month's entry if you're a bear. And that trend will be born. They will overwhelm the bulls and then attract more bears. Okay? It's true, baby G. Sure trade got in last night? Okay. It's all about planning this ahead, guys. You have to have the bias. Otherwise, if you were not a bear, like let's put it this way, if you were not already a bear, you would have missed this. You're just not ready. You're not even looking. And that's the issue. That's the primary issue. You're not there. You're not looking. If you're not looking, you're not going to see it. Because you should know, like yesterday, you're thinking, oh my God, this is way out of position. I really think it's going to come up and hit my price. So I know either, I don't know, London Open or New York Open, I got to be ready somewhere around there and to be ready to take the shot. Okay? Someone after the fact is just missing it, right? You're reactionary. Okay? But that's quite obvious, actually. And then notice this. You can play it like a double top, lower low, lower high roll reversal. Like the entry here is also very good technically, right? And so you would zoom in on a 5 and trade it that way. And you can see on the 5, it's once again, only if you've already expected it. You're like, I wonder if it's going to react. Holy smokes. Holy smokes, right? Now you got the lower low, lower high, roll reversal, dump it like it's hot, okay? And you would have prepared for this for, I don't know, 3 days. Okay? If you're not preparing for things 1 or 2 or 3 days in advance, like you're just not going to catch it. That's all. And there's no way you would have known it was coming. I'm not suggesting like, oh, I knew all of that. No. If you were a bear, it's just another trade. It's just another bearish trade. And it worked out. Boom. Why? You sold at the bearish monthly pivot. You're like, it's not that complicated. You don't know it was going to behave that way, but nor can you influence to behave that way, right? All you're doing is, you know fundamentally you're a bear, which is a way of saying, you know, the Fed is at the end of cutting interest rates, demand for oil is going to go up, especially if a China-US deal is announced. It's going to be good for Canada. It's going to be good for the United States. Remember, good for the United States means weak dollar. You have to, a lot of people miss that. Okay, you have to write that down. Good for the US is weak dollar. Good for Canada is strong Canadian dollar. Strong, right? Good for everyone else is strong. Good for America is weak. And it has to do with the reserve currency aspect of it, okay? So watch this now. There'll be a bounce either here or lower. Okay, and if it does bounce here, this is the new sell zone, guys. So if you're going to scalp now, because, I don't know, you missed the first one, be prepared for that, and then get ready to do this. I don't know if that's going to happen, but think of it as an if-then statement. Okay? If it bounces here, then you're going to sell there. There we go. That was hard work. Okay. You see what I'm talking about? Sure know what I'm talking about, huh? Any questions, guys? Okay. Cool. Rad life. Great. Yeah, you could buy it there, but I'm very concerned. It's not a bullish move. Okay, this is a bearish move. This, right? So you can join the swing trading class directly. I recommend you get full training, but the swing trading course is in the swing trading course. Is in the swing trading group. Okay. And somebody asked a couple of days ago if I was going to do like a Black Friday deal on the full swing trading course that has like, or the FX bootcamp courses, like the all-in-one pack, right, where you get technical analysis, fundamental analysis, like I don't know, all of them. What is it? 30 hours of videos. So I think I'd do that, but I just have not had time. I don't even have time to sleep. So, but I'd like to do that. I just haven't done it. Jaime says, do you think creating a custom chart to show a euro or pound index based on their respective pairs is worth looking at? Well, we can take a look. Oh, the question here, Wayne, any guide on fundamental analysis? Yeah, take the fundamentals course at fxbootcamp.com. In probably 4 hours, you will be managing the balance sheet as a bank manager, looking at the liabilities and assets of bank capital so that you can then understand how a central bank works. So then once you understand how a central bank works, I take you through the math of monetary policy. So, oh yeah, James, that's right. We used to do that, didn't we? Huh, see, I don't even think about these things. Yeah. Maybe I'll tie those in somehow. Cody says, any advice on Asian session scalping? Yes. Shanghai Open. It used to be the Tokyo Open. Now it's the Shanghai Open. So 9:30 p.m. Eastern Time. Okay? So anyways, look at this. Pound reasonably strong, euro reasonably weak. Aussie and Kiwi not so good, Swissy strong. So this is risk off. Yen is strong. This is risk off. Dollar strong. This is risk off. So things no so good right now. Okay? But I think everyone is pausing, waiting for the Trump speech. Okay? Kiwi Swissy stuck in the range. Oil trying, CAD trying, lots of things trying. Euro dollar down. So again, US dollar strong and euro is weak, as already covered. But this is not a good place to sell. In fact, what we talked about, this is a potential reversal, but just simply basically a terrible place to sell. Risk off is not good, right? So I'm holding my breath for the Trump thing. So I think that's what's happening, guys, is people are preparing for bad news from Trump. And if we get good news, boom, yen pairs go up, Swissy pairs go up, right? Dollar weakens, all good in the hood. Well, that's for the press, right? Our lead says President Trump tweeted the economy is booming 2 hours ago, right? Is that a hint? Well, that's the funny thing. Like, the economy is not the stock market. Okay? So there are plenty of situations like the European economy sucks, but the stock market's up. Why? Because it's cheap. Like, you have to think of the behavioral finance, right? Sometimes people simply buy because it's cheap, not because it's good. Well, yes. I mean, yes, Mohammed. Yes. Stock market's going to go up till the third week of November. Yes. Actually, did I say November? Sorry. Hopefully December. So hopefully up until December 12th. Okay? Then I'm going to take the stock market down. I'm going to cull the herd. So right now, the herd is thick with the old, the sick, and the weak. So I will take that down. No, when I say Europe, I don't mean UK. I don't know if that's even appropriate, but I never put UK in with Europeans. So anyways, yeah, so when Trump says, hey, the economy's booming, look at the stock market, that wouldn't get past freshman economics. Okay, the stock market is not the economy. So anyways, so that's cool, but that makes sense. Like, that's what he should say because that's what people think. That's cool. But it's not academically correct. So, but people are feeling good. The stock market goes up and voters feel like they're rich. Okay? But that's going to change very quickly. So the economy won't change, but I'm going to crash the stock market. I'm going to do it personally. I'll make a lot of money really quickly. My personal economy will improve even more. And then I'll just go back, because to me, it's just part of seasonality and stuff. It has nothing to do with the economy. It's just, right? That's the stock market. So anyways. But it's easy to say when it's up. Do I talk about individual stocks here? No. So if I were to manage your portfolio for you, I would not buy individual stocks. I would not. Okay? I would buy the S&P 500. It's cheap and fully diversified. So this idea that you need some of this and you need some of that and you need some of that, I'm like, just give me the S&P 500. And then often when I hear a money manager, they're like, oh, well, you need diversification. Like, what are you talking about? I have 500 companies. It's completely diversified. I'm capturing the beta. I just want the beta. Okay? Well, we got to be careful on the crash part. And I don't know if I said that. I was being facetious. But there will be profit taking coming very soon. Yes, absolutely. And by the way, it has nothing to do with the economy. So what creates a 10% decline in the S&P 500 in a week? If it's not economics, what is it? So Tom, I like stock indices, I like bonds, I like commodities, right? Stock indices around the world I just love, right? And then Forex. Pretty much everything except individual stocks. Okay. Profit taking, thank you. Not politics, just profit taking. See, there's one thing with the stock market. You don't get paid until you get out of the position. Okay, let's say, so as you guys know, I owned Apple at $6 a share. I sold it soon after Steve Jobs died. So I only made, 30,000% return on investment. But let's say I was still in it. Okay, I don't know what Apple's trading at, $1,000, and I bought it for $6. Okay, great. Now, can I eat that? No. Now, if I was trading Forex, I'm getting paid instantly, right? But in that case, you can't eat your stock position. So the only way you can get paid is to cash out. So what do you think happens near year end when you're a hedge fund manager sitting on $1 billion profit? You want to sit on that? Well, there's two ways to answer this question. When do you want to pay taxes? Tom, taking profit in the stock market would not affect the dollar at all. Doesn't change the number of dollars in circulation. 262, okay. So if you want to pay taxes this year because you think next year taxes are going to go up, then you will take profit in December. You will get your year-end bonus, and you and your mistress will fly to the Caribbean and party like rock stars. Models and bottles. However, if you want to defer your taxes, instead of having to pay for it in I don't even know when individuals pay taxes here. Was it? Forget, April, that's right. You have to pay in April, right? Or, right, so if you take profit in December, you're going to have to pay taxes in April. But here's the thing. If you take profit on January 1st, 2020, you don't have to pay taxes until April 2021. So the difference is if you take profit, let's say December 15th, or I can make it more I can exaggerate it even more. If you take profit December 31st, you pay taxes in 4 months. If you take profit the next day, you pay taxes in 16 months. Nick, I live in the United States of America. Everything is taxed. It's like, oh, did you die? Oh, gotta pay taxes. You're like, I paid taxes my entire life. And then after I got paid, I went out and spent money. And I had to pay taxes again. And then I decided I should buy a house instead of renting. So I buy a house, which was super expensive because of all the red tape. And 25 years later, I sold it for a profit. And then I had to pay taxes. And then when I die, you take half of what's left? Oh my God. Yeah, you pay taxes, bro. Taxes. But my nukes are bigger than your nukes. Right? When my bank goes out of business, my government props it up. When your bank goes out of business, you lose your life savings. I don't know. But whatever, right? So anyway, so it comes down, let's go back to the behavioral finance question. So if you're sitting on $1 billion profit, you're going to want to take profit because you got to get paid. And remember, it's not your money, it's your client's money anyway. So you don't care. You just got to get paid. It's right. Your jet needs to eat. Cool. So now you decide, when do you want to pay taxes? If you want to pay taxes this year, you're going to take the profit in December. If you want to pay taxes in 16 months, so defer, you're going to take profit in January. Okay? Puerto Rico, baby. Puerto Rico, ho! Yeah. So anyways, that's what's going through my mind. Now, I know somewhere between the third week of November's, that's next week after next week. So basically by the end of next week, right, third week of November to the third week of December, I traditionally get out of my portfolio and I stop and reverse. So if you're hanging with me, I will take care of you. Okay? So again, the big thing today is Trump's going to either make an announcement that he's doing a deal, and that'll be good for soybean farmers. Okay? Then great. If he says, look, I'm not signing a deal, the Chinese jumped the ship here or jumped the gun here, I'm not ready, now's not the time, then yen pairs come down, Swissy pairs come down. And my bigger concern is it's not just down for the day or down for the week, it's down for the rest of the year. Now, I threaded this needle for you guys a couple of weeks ago. I didn't mean to do it today, but I just said it. I don't know if you even caught it, but if I'm talking like next week could be when the market comes down for the rest of the year, next week. And I was talking about this 3 months ago, 4 months ago, 5 months ago, 6 months ago, 7 months ago, that the third week of November, this is when you should get ready. This could be when it comes crashing down. Could it possibly be 3 days early? Okay. Well, if Trump just comes out and he's like, there's no way we're going to do a deal with the Chinese by the end of the year, that's that. If he says, yeah, it's all good in the hood, boom, this goes up, then the next concern will be the second week of December, and that's a Fed meeting. And the Fed says, okay, we're done. That's awesome. That's really good for me. Or they come out and they're like, you know what? We're not so sure. There might be another cut yet in 2020. Then I start buying dollar. Wow, Zoe, crazy. It's kind of cool, though. But crazy. Goodbye. It's amazing what people say in these chats. All right. I guess that's it, right? So if you're new, guys, please subscribe to the channel. Show YouTube some love. Say, hey, man, YouTube, you need to value Forex.Today and promote their videos. Another way of you doing that is for you to not just subscribe, but please click the like. Only 1 out of 4 people, actually less than that, really, have clicked like. I'd appreciate a couple of more, please. And then mostly, please, 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 on the recorded videos, on all the recordings, please leave a comment. Right? There should be a couple of thousand people just saying hi or thank you. Takes you 1 second, right? But right now it's 30. All right? 0.1% have the common courtesy to leave a thank you. I'd appreciate it if you could do that. Not for me, but again, it's to tell YouTube that we're quality content and helpful to the community and to the world. And it says, stop following all that scam artist BS stuff. All right? So do that for the world, make the world a better place. So peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. And notice we did not get dropped once today. Ha ha! Ha ha! Cool. That's a good thing. We fixed that. So peace on earth. May the pips be with you. May our profits be above average. Have a wonderful day. I'll see you.